So before I click forward for the slide, please note that 85% of India's climate finance comes from homegrown sources, domestic investors. So that's why we have more rupees and a little bit of a dollar. Okay, so this is a very difficult topic to cover in such a short time. So I see myself as a sort of glorified tour guide, taking you through the climate policy landscape in 2 installments. So first, we are going to look at the state of play, and that will be a racing car tour. So I will take you through a bunch of data. I won't really stop. The data is there. I just want to say a couple of things of what you should look for, and you're most welcome to this presentation afterwards so that you can go through it and maybe remember what I said or get in touch with me, right? So the thing that I really want to do after I spend only 5 minutes on the data is to actually spend 10 minutes on the innovations, some of India's innovations and contributions to the climate finance globally, which are relevant outside India as well. So I hope to spend more time on the innovations and some other interesting questions like climate finance, SDG finance, hedging climate risk, and the homework to-do list, and then I'll be out of time. So quickly, starting the race car, fasten your seatbelts. I will just zoom through and you won't even be able to see my numbers properly because I'll just be clicking straight through. Climate finance, we know this is the definition. You can see it later in the slide. The thing that I want you to take away from this slide is that developing countries need $2 trillion annually, right? There is 1.3 trillion invested annually, and how much of this flowed to developing countries? 2%. That is 30 billion of the 1.3 trillion got invested in developing countries. And we have to ask why and what should be done differently. Is it because there's no absorptive capacity? Is it because there's no pipeline of ready-to-finance projects? We have various reasons. Risk perceptions, what can we do to reduce those risk perceptions if we are unable, as developing countries, to attract a significant, more than 2% share of this climate finance that's coming up. Now let's come to India. India requires at least $160 billion annually. What did we deploy last year? We deployed 44 billion out of this 160 billion. And that too was homegrown in the sense that it was domestic investors who funded most of this. So the bottom line is that international investors are just not coming to fund climate projects in developing countries. 85% is raised domestically, 60% private, 40% public. That's a huge amount of public, by the way, 40%. I don't think there are many countries where 40% of the government's budgetary resources are going into climate projects. And we all know this, 100 billion was promised in 2009. Finally, they reached 100 billion in 2022, but it was still mostly in the form of commitments, not disbursements. I need to speed up my racing car. These are the instruments. And let me the last point is that renewable energy stocks are vulnerable. We had a bit of a unique run in the past decade with near zero interest rates in dollars and euros. That's not going to happen again for about another 5 years, at least. So the prospects for renewable energy investments have just gone down, which is why you see a lot of renewable energy companies' share prices are getting hammered, even though their order books are full, but the market just doesn't believe with this rising interest rate that they can credibly fulfill on all those orders that they're getting. Some of them are likely to be canceled, like we saw in offshore wind. And in the meantime, despite everything that was said at COP28, whose share prices are zooming up? Oil and gas. So just put that in your pipe and smoke it. Think about it. Why is that the case? This one, don't bother. I just want you to look at red and blue, and you can see this more closely if you want. This is the private 60% and public 40%. This is India's climate finance. On the right side, what is it used for mainly? We have energy efficiency, we have clean transport, and we have clean energy. Now I'm going to zoom in. So if we zero in on the clean energy portion of the previous slide, we have solar as the biggest claimant of this, and then rooftop solar is just a tiny bit above that. We have onshore wind as the next, well, hydro energy and onshore wind. So essentially, this is the landscape of green finance. Racing car goes on. Financing gap, there are 4 graphs here. Nothing more to say other than down in the blue area is where we are, up in the dotted line is where we need to be. This is the up and down pattern of the investments that have materialized. This next one, the circle, is the green bonds. So we have issuance, 49% of India's green bonds were issued by utilities. That is NTPC, Power Grid, Power Finance Corporation, REC, etc. These are our issuers of green bonds. The next one is the corporates, and the light blue segment is the financial sector. Why are they so little in terms of the issuance? They always say that they basically don't have good pipelines of projects. When they're not the doers, right? They go and solicit investors, and the investors say, show me where you're gonna put my money, and they're like, you know, we don't actually have anything ready to show you in a systematic format using proper taxonomy and so on, things that you can relate to. Sorry, we don't have it. That's why they're so small. And this last one, you all know that we have mitigation, adaptation, and resilience. These are the 3 things that climate finance is deployed towards. So the orange part is mitigation. Why does it attract almost all the funds, whereas the little gray slice is adaptation? Adaptation is what people really need to essentially increase their resilience, but they don't attract money because mitigation essentially has a revenue stream coming with it, which an investor can relate to. You are basically generating clean energy and you can sell that for money instead of generating fossil fuel energy, whereas with adaptation, there's no revenue stream. And when you have international climate funds, the little bit that comes in, where does it go? So these are the donors. You have, in the center, you have World Bank Group, ADB, Climate Investment Fund, CTF, UNEP, UNIDO, UNDP, etc. This is the UNFCCC, like the Clean Development, I have a pointer, I think. Clean Development Mechanism, Adaptation Fund, Green Climate Fund, Global Environment Facility, all these. The recipients are the nodal ministries. We should have MNRE here, Ministry of Power as well, etc. They send the money over to the development finance institutions. SIDBI and NABARD are accredited to do Green Climate Fund projects. Public NBFCs, non-bank financing companies, IREDA, Power Finance, REC, etc. And essentially, this is the sort of flow. And then over there, you have the bilateral institutions. Everybody loves the bilateral institutions because they come with a lot of technical assistance, which is absolutely crucial to develop good projects. Moving right along. Okay, I think I made it to through the factual part. So our racing car is going to slow down a little bit now, just a little bit. And we will talk about what I think are India's contributions to essentially to the world in the form of business models and other innovations. And I have worked in other countries too, and business models like we have in India are not always very much present in those countries. What we really do well is this idea of the third-party investor and selling clean tech services as a service. So you have solar as a service, battery as a service. We don't have green buildings as a service, but we could. So the essential idea is, first of all, the size of our market allows us to aggregate a lot of demand, and then we have a third-party investor who's willing to take the loan, invest the capital in the clean tech. They are much more creditworthy than the individual customers who couldn't get those loans. So we have the demand aggregation factor, the third-party investor, and the as-a-service type of business model. And for example, I don't have time to go into it now, but in the rooftop, we have the RESCO, the Renewable Energy Service Company. So we have a boom, build, own, operate, maintain, build, own, operate, transfer. We have the lease, we have the rooftop rental. These are all innovations in India. We have a fantastic case, just one of its kind. We haven't repeated this. Madhya Pradesh, essentially, the government, the state renewable energy agency helped with price discovery and essentially partnered with a bunch of potential customers, organized a data room. Why are the costs higher than they need to be? Because the bidders who will bid to offer you rooftop solar have to spend a lot of time and effort getting your data. You know, what is your annual bill? How much is your load? How much is your rooftop space? Which part is shaded, not shaded, blah, blah, blah. So if they can be handed all that on a platter, so they don't need to spend efforts to get that data, then they can give you a much lower quotation because they know exactly what they have to supply. They don't have to bill you for finding the time and effort spent to find all that. We have a great case study in Madhya Pradesh, so that's the data room rooftop tendering. We also have another Indian, I think for two-wheelers and three-wheelers, EV two-wheelers, three-wheelers, we have quite a good battery swap thing going now. And that's very relevant for other developing countries where you can just essentially, for the lowest income market segment, you can separate the cost of the battery and the cost of the chassis. We also have EV charging stations. We were hearing about it yesterday, the PPP, in the sense that DISCOMs are being asked to make available some of their land and partner up with a private investor. This public-private partnership is also a new thing. Something that we do well is this bulk procurement to lower the price. LEDs, we all know how that price came down. We have a cooling action plan. India was the first country to have a cooling action plan. This is an agri thing. I'll run through that. We have the carbon market, which is just for domestic, for the standard technologies. And we've said you can only have ITMOs, the internationally transferable market things, if you are bringing us a new technology, the mitigation things. We have the Global Biofuels Alliance, Mission Life, we are all supposed to be. These are not really active yet. Mission Life, I haven't seen. I mean, it's talked about, but once we start adopting a more sustainable lifestyle, probably it should help the national goals for carbon mitigation. We have green credits, again, not yet active. We have the sustainable alternatives for transportation, affordable transportation. This SATAT system is helping private individuals to invest in compressed biogas stations. It's a government scheme. And the waste to wealth, we heard about it this morning. There is a government initiative. One idea we could have is secure offtake arrangements. If you have a creditworthy party like SECI, rather than a DISCOM, buying your 8 rupee power, which is the one that comes out of the waste-based power, and you blend that with much cheaper solar, then you could come out. That's how you're going to mainstream the power from waste to wealth. Otherwise, nobody is going to buy something just on a standalone basis for 8 rupees when it's available in the market for 2.5. Okay. SDG and climate is, I don't have time to go through this, but let me just on this slide say that it's a capacity building issue. We have very little awareness of the state action plans and all the parties that need to coordinate. So this second to last bullet point, we need to have capacity building of urban local bodies. I think urban local bodies are a huge failure in terms of our overall delivery system. They are crucial and they are not trained. They don't have a clue. They don't have money. They're not being used properly. So let me move on. This is a little cute thing that I thought I would mention to you, but we don't have much time. In India, we have RE capacity. I'm going down to the bottom first. In India, we have, right now, we're focusing on RE capacity addition. We have consumer rights in the legislation. We're focusing on loss reduction. This is what you talked about. And we've progressed on those, not so much on manufacturing and the transmission capacity. This is for a country like ours. For a country where climate finance is not an issue, like in the US, and you're getting loads of subsidies as well, what sort of things are they looking at? They're looking at whether you can hedge climate risk. Right now, there's no commercially available hedging instrument, but there are 3 US universities that I just picked at random. They're doing some fun work in terms, this is when they don't have to worry about where's the money coming from. They can play at the next level, and that's building, they're doing large language models to analyze news coverage and see which portfolios go up when there's a climate event, and see if they can build hedging instruments. NYU takes local extreme heat events and looks at observed trading behavior. What do people do when these things happen, and can we extrapolate? So this is the fun sort of, I just wanted to mention what other people are doing when they're not worrying about raising money. This is my last slide. We want to become a green superpower, and what happens in India doesn't just stay in India. It should actually be used by a lot of developing countries. Our frugal solutions will be very much needed. So we need a data obsession, and we need an action obsession. So I was really happy that yesterday, essentially what Anson presented about the deep dive they did into their energy efficiency and their cooling need and the cost, and showing essentially line by line, this is what we need to do overall across the board with Indian climate zones, because all our climate zones are relevant in some developing country or other. So what we don't have global data on is what is the temperature and humidity linked performance of different clean technologies, because the standards that we all use are calibrated for between 18 Celsius and 25 Celsius because they were developed in Switzerland and Germany back in the day. So those standards have stayed, and now there's a huge amount of work needed for what actually happens to us when you have this kind of ambient temperature of 40 plus, and you have humidity in some areas, and so on and so forth. So we need to contribute to a huge amount of data which will be used by us and by developing countries. And then we need to be obsessed with action as well. We need to show that, okay, this is not working. We need to show that we have affordable, low-cost technology. I was saying domestic Nobel Prizes, essentially, let's give people money for their intellectual property, and then let's just put it open source. So we need these solutions not to be used in the business model of, let me now dominate the market with my, and get IP returns and so on. This is too important for IP. We need R&D, we need, you can see what it is, but green procurement I wanted to mention. Government of India could help a lot. They are the biggest buyer of services in our country, so they could, for example, put this into their procurement from startups. How much they would help startups if they set aside even 1 or 2% of their overall procurement budget and say, I'm going to get this from a startup that is working on clean tech. AMC is the World Bank's thing for advanced market commitment. So if you give a contract to a startup, they can get financing if they have a contract from the government. Low-cost sensors, big data building, and capacity building, very necessary. So, bye-bye. Thank you.